Hi everyone, I'm Matt from Look Into Bitcoin. Today we're going to be doing a Bitcoin roundup to discuss the current market conditions. We're going to try and gain some insight into Bitcoin's recent price action and how we should consider positioning ourselves going forward. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin price live chart. And as you can see, since the start of the year, we're up around 70%. So definitely not a bad first quarter of 2023, especially considering how poor year 2022 was. And because of this bullish price action, a lot of people are becoming more and more hopeful for the coming weeks, months, and even years for the Bitcoin price. As we can see here from the Fear and Greed Index, we've actually seen this score raise above 70 and stay in this neutral, even somewhat greedy stage for the first time in well over a year. So there's definitely a fair amount of market sentiment shifting. And as I said, a lot of people just generally becoming a little bit more bullish, especially if we see the more recent overperformance of Bitcoin compared to traditional markets. As we discussed in our latest video, this isn't necessarily a decoupling from Bitcoin and traditional equities. This is more just an outperformance as Bitcoin really shows its strength bouncing off the yearly lows. But realistically, we can't complain. This has been a great first quarter of 2023. We need to try and look into what the coming weeks and months may show us in the Bitcoin price to see if this bullish action is going to continue, or maybe we're due a bit of a pullback, or at least just some consolidation in the Bitcoin price. So the first chart we have here is the net unrealized profit and loss, or the NUPL chart, and this is taking the market cap, which is the price of Bitcoin multiplied by the circulating supply of all the Bitcoin currently in circulation. So about $27,000 multiplied by just over 19 million Bitcoin gives us the current market cap of Bitcoin, and then we're subtracting the realized cap from that. Now the realized cap is taking the realized price, which is the last transactional value of each Bitcoin on the network, and once we aggregate all of those last transactional values and multiply that by the circulating supply, we get this realized cap, which shows us something like a fair value of Bitcoin, a fair network utilization value, and then we just divide that by the market cap to get this net unrealized profit and loss. What we can see here is it usually ties in pretty well with the current sentiment within the cryptocurrency space. So when we have very low net unrealized profit and loss values, this coincides with what we'd say is a capitulation phase for Bitcoin and cryptocurrencies. And as we climb back up on this metric, we get into hope, optimism, belief, and at some point, hopefully, euphoria too. And then on the way down, it becomes greed, denial, anxiety, fear, and as we said, capitulation. So we can see we've actually bumped right into this optimism phase for Bitcoin. Now, this is a very bullish sign considering we spent a very prolonged period in this capitulation area for Bitcoin, and especially as we broke this trend of this NUPL ratio, just making lower highs, lower lows before finally breaking up in this quite exponential move to the upside we've had in price. So again, very bullish price action we've had, which is leading to this NUPL ratio giving us this very bullish signal as we enter this optimism area. One interesting thing to note as well is these red lines here, which I've just connected from the NUPL lows we've had in the most recent 3 cycles and the peaks we've had in this ratio too. We could see this most recent bear cycle bounced almost perfectly off of this support line I've just drawn here, and each cycle peak again has just bounced off this red resistance line I've drawn here. Now this coincides with the idea of potentially diminishing returns and lengthening cycles in crypto and the Bitcoin space. So it may actually be worth noting that in the next bull cycle we may not even reach this euphoria and greed area, as we don't potentially far exceed the realized cap like we have in previous cycles. So it may be worth keeping an eye on this metric and potentially even drawing something like this in yourself so you can keep an eye on things, especially as we get overheated in the tail end of the bull cycle. What we can also see is during the previous bear markets, as we left the capitulation into the hope and optimism phase, we usually get this prolonged period of consolidation. So if we just look to this first bear cycle we had here in 2012, we can see as Bitcoin bounced off the bottom from this capitulation area into this optimism area in around early 2012, around January time, we actually had this retracement in price and this long consolidation, and we didn't actually break above this again until July, so about 6 months later. And the same can be true for in the 2015-2016 bear cycle. After Bitcoin rallied from the lows, got into this optimism area at around November the 4th, 2015, we had this not so much a pullback, but just a long consolidation area in this NUPL ratio, and didn't break above until May, maybe June 2016. So again, about a 6-month period after making this rally off the lows of consolidation before we rallied even higher. And once more in this 2019-2020 cycle, we saw Bitcoin rally even higher into this belief area on the NUPL ratio before we had this very prolonged drawdown period, potentially due to the COVID 2020 crash. But after breaking into this area in around June 2019, we didn't break above again until December 2020. So a very long period of time there before breaking into the more extended period of a bull cycle. So I'm not necessarily saying that we need to have any consolidation or pullback in Bitcoin's price right now. It's just historically speaking, this does tend to happen after we've rallied off the lows. We usually have this transitionary period where Bitcoin's price has a little bit of a breather and doesn't just exponentially rise for weeks, months, or even years at a time. We need to create this cycle so it's sustainable. We need to gradually move up, allow new buyers to come into the Bitcoin space, more interest to come in and actually trade and invest in the Bitcoin and cryptocurrency sector to really pump us higher to get this sustained liquidity injection and potentially even more institutional interest as the cycle actually becomes more mature and grows as price really calms down and grows at a more natural rate. So if we then go to the hash ribbons indicator, we can see that the miner hash rate, or the computational power miners are putting into the network to secure the Bitcoin network, as well as to earn block rewards and fees, they are definitely not stopping their investments into mining Bitcoin. And this hash rate has just climbed exponentially since we had this most recent hash ribbons buy signal just a few months ago. Now, we do see this parallel correlation usually between the hash rate and the Bitcoin price action. Usually when we see the hash rate climb rather exponentially, the Bitcoin price usually climbs too. So maybe this is a counter argument to the previous NUPL, potentially suggesting more of a consolidation period. But we have to acknowledge that there are periods of time when Bitcoin's price decreases for a prolonged period and very much to a substantial degree as the hash rate increases. So maybe it does take a bit of time for these miners to actually become accustomed to the decreased Bitcoin prices and actually start turning off the machines or stop investing in new tech to mine Bitcoin. But overall, this is still looking rather bullish, so this could really go either way. We'll just have to keep an eye on this metric. But I think one of the most important things we need to keep an eye on right now is the golden ratio multiplier. Not something we've discussed too much recently, as Bitcoin had had this rather sustained period beneath this orange line here, which is the 350-day or almost a year moving average. And if we just isolate this moving average by removing all of the other lines on the chart here, you'll see Bitcoin, once it actually crosses this 350-day moving average, in every single cycle has given us this rather long and prolonged bull cycle with huge exponential gains. So we saw here in 2012, once Bitcoin crossed this after the bear cycle, we ran up from around $7 to well over $1,100. And again, after this bear cycle, we crossed above around $290. We had this further run up in price before this consolidation period we discussed before, but ultimately it took us to nearly $20,000. And again in 2019 here, as we crossed it around $6,000 to $7,000, Bitcoin's price doubled following that before we had this COVID 2020 crash, which temporarily brought us below again, but once we crossed back above, we saw prices rally from around $7,000 or $8,000 to well over $60,000. And very recently, Bitcoin has actually just crossed above this once again, so probably more of a bullish sign. We need to acknowledge that maybe this doesn't necessarily mean we have to continue our exponential run up, but potentially that the bull cycle really has begun, or at least the transitionary phase from a bear cycle to a bull cycle where we allow new investors to come in and maybe some rest from the prolonged selling we had all of last year. But if we just add all the other lines back onto this chart here, one interesting thing to note is in the previous cycles, we've always bounced and hit one of these colored lines we see here. Now these colored lines are just multiplying this 350-day moving average by a set number. So for example, this green line is multiplying it by a value of 1.6, the red line is multiplying by a value of 2, and the purple line multiplying by a value of 3, etc. So what we can actually see is every bull cycle, this actually hits a lower line than the previous cycle. So we could see in the previous bull cycles, this hit multiples of 21 times, 13 times, and 8 times this 350-day moving average. But in the most recent bull cycle, we just hit a multiple of 3. So potentially in this cycle, we'll hit a multiple of 2, which is this red line here. This is currently sitting at around $46,000. Now, we don't usually instantly run up and hit this high multiple line. We usually hit one line beneath that. So in the previous cycle, we could see here, we ran up and hit this red line before consolidating, we had some drawdown, and then we ran up and hit the line above that. So if we're to experience some similar price action in this cycle, we could potentially run up and hit this green line before some drawdown, consolidationary, transitionary period for building a stronger base in the Bitcoin price before running up again to this red line. So this green line is currently sitting around $36,800, maybe $37,000, but this value is changing daily, so it's always worth keeping an eye on things. But that's probably a strong level of resistance for the Bitcoin price action if we are to rally any higher. So just to summarize, after a strong end to the month of March, Bitcoin has rallied over 70% from its yearly low to give us the most bullish quarter of price action in 2 years for Bitcoin. And this is leading many traders and investors to become more bullish and optimistic on the future profitability of Bitcoin as it becomes more and more apparent that the price bottom for this cycle is most probably in. However, looking at historical comparisons of price action and on-chain metrics, we're probably likely to see some consolidation in price, maybe even a little bit of a pullback in Bitcoin's price before we get any sustained moves higher. However, we need to acknowledge with fundamental factors such as quantitative easing in the US and just more bullish economic policies coming into play regarding interest rates and such, that anything really could happen. If you like this video, then please visit lookintobitcoin.com, where you can also consider being a site subscriber to get access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And I'll be honest, a lot of the content from this video was actually inspired by the most recent newsletter we've had from Philip Swift, the founder of Look Into Bitcoin, which included some great charts and insights that I just couldn't not include in this video. So I definitely recommend subscribing, even just for the newsletter, and then all the rest is just a bonus on top of that. And also, let me know in the comments down below and on social media what your thoughts are on the current Bitcoin price action and where you think we could go in the coming weeks and months. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.